Hey everybody, Jim Malone here, coming to you live on Dallas Trading Floor. Just trying to get my um my other thing working here. Okay, let's start over. Okay, right. I didn't put it on the right one. Let's do it there. Okay. You would think I would be better at this after doing this every day for almost a year. So, well, darn it. Heck, trying to get it Trying to get it to go. Oh, okay. We'll just use this background. Heck. All right. So there we go. All right. Everybody, I'm live on Dallas Trading Floor. And it looks like we have to move that stream. There we go. All right. So we should be live. I've got some weird I've got some weirdness again. Let me just go out of the studio and go to the stream. Okay, I think there we go. I think we're on. I think we're working it now. I think we're working it now. So let's get to some of the just the real quick on the slides here. Just kind of wanted to show you my positions. I did move into microchip. It's going to be splitting 2-for-1, and that's coming up. So that's kind of a nice opportunity. I'm going to see, if that'll work, but we shall see. We're in a confirmed uptrend, which is a good thing. The market has turned very nice right now. Now, how long that'll last, I don't know. Who knows? But at least for right now, we are in this confirmed uptrend. So that indeed is a very good thing. Just kind of want to show you what I'm in currently. Stocks that I have, Apple, it's up $1 today, which is kind of nice. It just still keeps, hitting that ceiling there, that 150 ceiling. It just seems like it can't move above that. So I don't know what it is, but hopefully we'll be busting past that 150 ceiling, and it will move higher. Palantir's up today at about 3%, a little bit over 3%, a little bit of volume there coming in. Palantir has some great earnings, and a lot of people seem to really like the stock. So I'm definitely in it. And hopefully we'll see how it does. Robert Half, again, I doubled up on the positions here. It's moving up very nicely. Volume is down. It's a little concerning. Berkshire Hathaway just basically flat. It's up 79 cents, really not anything to talk about. The chips have been getting a lot of love as of late. My position in ST Micro, it's up again today. It's just kind of crawling up there, not zooming up like Nvidia, but doing well. Goldman Sachs, nice move today on Goldman, up about 6.26%. Now this is interesting. Goldman is a little bit different than a lot of the other stocks because they make the majority of their money from trading and not from actually lending. So they're a money center, a bank, but they make most of their money trading. So a little bit different than the Wells Fargos and the JP Morgans of the world. It's up nicely today. Trex, this is the plastic wood company. It's up as well. We just have green across the board, which is really, really nice. I did buy another position in Matson Lines, which I like very much, and that's up $3 today. For some reason, the shippers are getting a lot of love. I don't know why, but they are. I did trim a little bit on Macy's, but it's up about 50 cents. Did trim in one of my positions, but I still am holding Macy's. It's doing quite well as well. It's up about 2.1% today. One of the real stories, of course, here is Nvidia. It's up about $6. It looks as if we have moved, and this is the key thing for Nvidia. We have moved above that very, very critical about 220, and I do think we're going to see some nice action on it. Airbnb, for some reason, is up today. The volume's down a little bit. That's a little concerning on me, but I do have Airbnb. Just going to see how it goes. I don't have a huge position in it, but I do like the name. This was not really bought. This is bought more on the fundamentals and not on the technicals. Remember, you always want to try to, when you're coming into stock, you want to look at the fundamentals. You also want to look at the technicals too, addressable market, that kind of thing. But you always want to sell in the technicals. So if it violates technically you want to, you want to get those sell signals quickly, but when you're buying, you want to look at something that it may be kind of a, something that's gonna change the world a little bit. And I think Airbnb does have those some of that criteria. Down a little bit on PerkinElmer, I still really like this stock. It is the company that makes gene sequencing equipment, and that is a very big thing. It's down 71 cents, but this is just a phenomenal stock. These guys actually made the Hubble telescope too. They've been around forever and a day. I think the company's like 60 years old. I think if you bought the stock way back when, it would have been $1, and now it's moving really nice. Microchip, I want to kind of put that on everybody's radar. This stock is going to be splitting 2-for-1 again. It's my third chip stock. I'm kind of heavy on the chips right now. I don't know. I may be readjusting that, but I like Microchip because it's going to do that 2-for-1 split, and it's up today as well, $3.63, or about 2%. So we'll see. This is in a very good pattern. It's a little bit below. I'm buying it a little bit early. It's a little bit below the buy zone, but it's something that, I think it has some real potential. So I just kind of want to share my screen here for some of the charts, and let's get over to that. There we go. And really, basically what's happening here, and I kind of want to show you this chart on Microchip because I think it's so interesting. At least from my perspective, it is interesting. Well, that's not as interesting there. Let's get the chart up here. Okay, and what I'm going to do here is I'm going to zoom in a little bit. So this may be a little bit jerky. Sometimes it is, but I'm going to zoom in a little bit and see if we can get up to about a 200% magnification, because it's a lot easier to see if that's the case. All right, so here we are with Microchip. Again, this one is going to be splitting 2-for-1. Looking at the daily chart here, but let's go over to the weekly chart. I kind of want to show you why I'm so interested in this one. This is my little reversal line here. It's this dotted black line here. And basically what that is that's the line that shows when it moves from going in a downward direction to shifting to an upward direction. As you can see, the relative strength line, this is this blue line here, it's pointed upwards. And of course, they had some very good very good earnings. And let's kind of just check in on those earnings. The sales were up 20%, but the earnings were up 27%. And again, I think it's been, I don't know how many years it's been since they split their stock, but they've split their stock before. I believe it was 4 or 5 years ago. But this company just seems to be kind of chugging along. I don't know what it is, why it is, but it's got a 33% return on equity. This is pretty excellent. PE ratio is relatively low at 22 for a chip stock. Nice cash flow, 765. Now, do I recommend the stock? No. I mean, obviously, you're going to have to make your own decision on this, but I'm certainly buying it, and the funds are too. So that's kind of something that I kind of wanted to point out to everybody. Kind of what I'm buying, kind of what is working for me right now, and that seems to be what's kind of working right now. So let's see if we can get. Good question. Thank you. Is AMD breaking out? Well, that is a good question. Let's kind of go back to the charts and see if AMD is doing what's up with AMD. Now, I do have a spread on AMD. It's a bull put spread, so it's a bullish spread, and I do really like this company. But the question is it breaking out? Well, if we look at the stock, if we look at the stock action here, this is a cup formation. It came out of a double bottom and then a cup formation. So this is what they call base on base action, and it's very good. It's a very good. It's a very good action. I definitely like base on base. It means that it means they're getting ready to possibly go a little bit higher. Right now, I'm going to click back to the daily chart. As you can see, it broke out very decisively, and then it pulled all the way up to 122.49. Then it pulled back. Now I had a stop at 116, so I was sold out there. So I had to wait until it pulled all the way back here to the 21-day line. But by the way, this is actually very healthy action. So this is actually very good action on the on the stock. So AMD pulled back, it bounced off that 21-day line, and now it's making its movement higher. Now, what's powerful about this one, you can see where I entered the bull put spread. I entered the bull put spread on the 26th. That was basically yesterday. And you can see, why did I enter it there? Well, the reason I did is because these little bars here, you can see how it went down and it touched that pink line. That's the 10-day average. Because of the way this typically works, when it touches that, it's going to shoot back up, and it did today. So very nice action on it. It's about 111 right now. Now the question is this actionable? Well, it depends. Isn't that a good word? Yes, it depends. It depends on whether or not you already have a position in here. If you already have a position, then I think it is actionable, and I do think you can add on here. But we are extended because remember, the original buy point, 95.44, and I just, this thing went so fast, I was able to catch it 5% above the buy point, which is the top of the buy zone. And then once I got in, then I added, but it got a little bit far away from me. Then I didn't add again. I had to wait again. I had to wait until I sold out, it pulled back, and then I bought another full position. And you see, I bought it at 109, which is kind of high. Now it's come back up, but I put a spread on it. So this is one of my favorite stocks. I'll be absolutely upfront with you. I really like AMD. I really like the action on it. Right now it's a leader along with Nvidia. So if you're looking to come into the stock, if it's a new buy, I think you got to wait a little bit, but there are some other options. There are some other options in order to get into the stock. Let's take a look at some of the analysis for BTC. Just seconds appreciated in advance. Okay, well, let's take a look. Now, if you're looking on TikTok, you're not gonna see the background. Unfortunately, my background is you have to go to the YouTube feed. Well, actually, if you're looking on TikTok, the easiest way to take a look at what I'm doing here is to go to my profile, click on the link, and scroll all the way down, and you'll see the live feed for YouTube, and it does have the charts on it. So I just want to kind of put that on there. Okay, so we're interested in possibly taking a look at what's going on in the wonderful world of Bitcoin. So first of all, I'm going to take a look at the BTC. This is the GBTC. Put that in there. Oh, okay, there we go. GBTC. And this is the Grayscale Bitcoin Trust. And why do I use this? Well, because this is an ETF and they control about 4% of the world's Bitcoin. And that's why this is very significant. Now, it has been moving very nicely, and it has moved beyond this reversal line. It's above the it's above the 200-day line. This is showing me that the demand for Bitcoin is bullish at this point. Now, because Bitcoin isn't obviously a stock, I'm going to go out here and pull up a chart for the Bitcoin itself, BTC, of course, and that's Bitcoin. And I kind of want to show you that on the screen. So here we go. There we go. This is just a web page that's showing Bitcoin pulled back a little bit. It was at 49,000. Been pulling back a little, but it's still bullish because it's above 40,000. This is on the 1-month chart. Let's look at the 5-day chart, kind of what it did this week. It sort of seems to be getting some support right about 47, and then it's moving up. So here's the thing. I think as long as we are staying, as long as we're staying above, we're staying above 40,000, I think you can definitely move into it. But below that, I think you got to be a little bit careful. The tough thing about Bitcoin is very volatile, of course, because there's a lot of people buying in. I heard somewhere, and this is really interesting, that it's one of the number one investments for people living in Turkey because the Turkish lira is in such a bad shape. So a lot of people are buying Bitcoin as a hedge, and you would think the U.S. dollar would be going down more, but it isn't because it's the reserve currency, which is kind of a two-edged sword because I really believe that Bitcoin exists to keep the U.S. dollar honest. At least I'm hoping it is. But the kind of thing is that I do think that Bitcoin, is definitely going to have a place in the portfolio. But right now, the way I'm investing in Bitcoin is to buy the GBTC, which is the Grayscale Bitcoin Trust, mainly because it's very fungible and I can move in and out of it very quickly, and I can also margin it. So that's kind of my take on Bitcoin right now. But I thank you very, very much for that question. And let's take another question from YouTube. Okay, so Netflix and HOLZ. Let's look at net. I want to kind of look at Netflix first in FLX. I haven't been trading Netflix that much. It looks like it has reversed, and that is indeed a good thing. So let's pull up the chart for, there we go. So basically, the situation here with Netflix is, we have moved above that we've moved above the um, reversal line. This is the reversal line that I have drawn here. So that is good, and we've moved above the intermediate high point, which is about 557. Now let me zoom out a little bit here to kind of get a look at the lay of the land. That should zoom us out there. There we go. So this is kind of how it's been trading. Right now, we did we moved below the 50-day the 200-day moving average, and then we bounced off that. We're moving up. So this is a very what I consider relatively early place to come into Netflix. I am not as excited about this area as I've been in the past. Part of the problem is that the leisure movies and related business, its category is 171 out of 197. Now, that doesn't appeal to me as much. And also, with companies like Disney, Netflix is starting to get a run for its money. Now, the question is, can they keep their can they keep their subscribers going? Well, I think it's slowing down a little bit. And here's what I want to show you here. Oops, let me kind of pull that out there. The subscriber growth on Netflix seems to be slowing down a little bit due to the fact that the sales were up 20%, 20%, 20%, 20%, but now we're at 19%. Now, why is that critical? Well, I'm looking primarily for a stock that can go up 20% in sales every quarter. Now, that's a stock that's doing extremely well. And I'm not saying that Netflix is not doing well. I'm just saying its growth is starting to slow slightly. So that might be a concern. Also, if you look at the chart, we have two consolidations, but they're not very, very much up. So it looks as if the 200-day line has caught up with with the price. So here's what I would say for Netflix. I think that it's probably not a good time to be entering a new position because it just doesn't seem to have as much mojo right now. Now, of course, I could be just totally wrong about that because it could just pick up towards the end of the year. But right now, I think that there's a little bit better merchandise out there, and it seems as if, at least from my vantage point, that we're seeing a lot more action with some of the chip stocks, chip names, than we are with some of the really considered software as a service. And really, Netflix is essentially a software as a service because it's streaming software. It's really what it is. So the question is, that's really the question. So let's look at HOLZ. Not something I really know much about. It's imaging systems for surgical products for the needs of women. I just don't know a whole lot about it. It doesn't look like it's overly exciting to me, but it's in a great area. Medical systems, 8 out of 197. We definitely had some nice movement in terms of price here. Nice formation. This is a cup without handle, but it's in an upward trend on the weekly chart. That's very good, actually. And it's right in the buy zone. Oh, and a double bottom. Okay. Yeah, this is absolutely viable. All right, now, HOLZ. This is absolutely viable. It's on a very, very good pattern that I happen to particularly like. It's called the double bottom. And my pattern recognition has picked that out. It's basically viable above 77.17. So that's looking pretty darn good. It's currently at 79.19. Of course, we're after hours, so you take the weekend off, relax, and see what happens. See how it trades tomorrow. I mean, see how it trades on Monday. So I don't really have any more information on that for you. So let's okay. So I'm going to go back here to TikTok. Thank you very much. Um, okay. Let's see. All right. So let's go to Zynga. ZNGA. Let's look at that really quick. GA. Okay. Ooh, this had a nasty fall here. Let's zoom in a little bit on that. Yeah, yeah, and we can see this here, and I'm just kind of zooming in on the chart a little bit so that everybody that's watching on, watching it on YouTube can kind of see what I'm talking about here. This is this black line here. This is the 200-day moving average. We're definitely pulled below that. We had a gap down on earnings. Look at this. This is always why this is a very instructive chart. The reason it's very instructive is because everybody thinks, well, I'm doing so great. They're going to have great earnings going into earnings. Well, you never can tell. So if you're not up 10% on a stock going into earnings, you should consider selling it, waiting till it comes to earnings, and then buying it back. Now look at this. This is exactly what happened here. When we went to earnings, they had great earnings, but guess what? Everybody sold anyways, and we gapped down. So I am a little bit leery on this stock. I don't typically like to buy any stock that's below that's below the 200-day moving average, and that's definitely the case here. This stock, unfortunately, is below the 200-day moving average. So I just think you got to mark this one off your mark. I think Zynga, you gotta possibly not, you know, you got to mark it off your list. Now, if you're down more than 7%, consider possibly selling it. It is in an upward trend, but it's still below the 200-day moving average. I just think there's better merchandise out there right now than that. I just think there's better merchandise out there than that right now. All right, and Mark also had a question on a debit spread. I guess what do you mean by debit spread? Okay, on the debit spread. You know what? I think you got to be a little bit careful right now with Tesla is sort of taking a rest. I'm not as bullish on it as I was. This is my best stock last year, by the way. And oops, let me see if I can. Okay, 1, 2, 3, 4. There we go. I'm just zooming out here a little bit. There we go. So let's take a look at Tesla. I want to kind of, you know, look at Tesla. TSLA, of course, is the symbol, and it is in an upward trend. I mean that's definitely true. You see, I have quite a bit of markup. It just moved above that reversal line, which is good. But the high, the intermediate high is the 729. So, it just keeps coming up here and it keeps pushing back. The problem with Tesla and the reason we're having so much trouble is what they call this is what they call overhead supply. Now, what do I mean by that? You're like, Jim, what the heck is this overhead supply thing? What are you talking to me about? What are you talking about? What's up, Willis? Kind of thing. The reason is that people bought it back here. It went up and up and up and up, and then when it started going down, they're like, I'm never going to sell. I'm going to hold Tesla forever, and it went down. And it went down, and then it came back up, and there was a little bit of hope, so there was a little selling there, but then it started to go down. So there's a lot of people that bought up here that haven't yet sold. So Tesla has a lot of overhead supply. So we really need to get past about the 730, 740 area before we really can do anything. So this is why I would be a little bit careful regarding Tesla, because every time it starts to make the move up, there's all these people that sell into that. They sell into it because of the overhead supply, and so it makes it difficult right now for Tesla to move above about 730. So that's a difficulty with Tesla. Let's look at Square. I had Square. I sold it. Yeah, there we go. And I had a stop loss. It's still below this buy point here. Um, it's moved above the. This is the reversal line. I'm going to reactivate that. This is the reversal line. So it's definitely above the reversal line, but it's below the buy point. The buy point being 830. 800, 200, excuse me, $283. That's where the buy point is. We're now below that. We've kind of getting some support here at the 21-day line, and it looks like, we may be starting a bounce here. This would be absolutely the earliest I would consider buying Square. I'd be a little bit careful buying Square, and I'll show you why. This is the volume here, and you can see it's relatively low volume. So it seems as if, one good thing I will say about Square, the people that have it are not selling it because look at that volume, it's down. So that's a good thing. But I still, it sort of has reversed at the 21-day line, but I'm still a little bit leery on it. So here's what I'm going to do. I'm going to reactivate this my alert here, and what I'm going to do here is I really want to, this is based on the consolidation. I really want to see, I'm really not interested in buying Square until it moves above about 273. So what I'm going to do is I'm going to put moves above. So basically what I'm saying here is that until it moves out of this consolidation and starts its upward trend, I don't think you can buy it, Sunil. I really don't. I think you have to wait. Here's what you want to do. Set an alert at let's see what this is. Set an alert at 273.42, and if it moves above 273.42, then consider buying it because you want to buy it on uptick. You want to buy it as it's moving higher. But right now, unfortunately, with Square, it's not looking as good as we would like it to we would not not looking as good as we'd like. All right, here's the great question. Thanks, Nico. Why sell before earnings instead of a tight stop loss in case it gaps up? That's true. You can definitely do that too. But here's the thing. The only reason I typically sell, and I don't do this all the time. It depends. It's really on a case by case basis. But I do like to sell before because I like to capture that profit. Because here's the thing. I believe very strongly that as long as there's a market out there, there's somewhere in the market where we're going to get an opportunity. So when it goes through earnings, I like to be out there looking to see where the real strength is going through earnings. So if I'm selling something that's not up 10%, I then will take that capital and then wait the next day, see what's really popping, and then I probably will buy it. I like to buy I like to buy stocks after they've come through earnings and they have had tremendous beats on the earnings because that's where the momentum is. So I like to get in on that. That's kind of the thing I'm doing by building a position in microchips. So that's part of my thing. I will take profits. I don't always wait for 20% to take profits. Sometimes we'll take them earlier. And one of my primary ways of taking profits is when it comes into earnings and it's up, but it's not up 10%. And then I'm like, well, I have some profits. I'm going to take them now. I'm going to wait for it to come through earnings, but I have the capital that I can redeploy really, really quickly. So that's kind of my feel. But it's all by feel. But one thing you've got to be aware of since the rules changed about 20 years ago regarding earnings announcements, stocks tend to move a lot more in earnings now because before they kind of would pre-disclose some of their earnings to some of the people that were in the loop, and that was the way they did it before. So it was a lot more stable. Earnings didn't create this volatility, but the way it works with the SEC rules now, companies are not allowed basically to share a lot of their information. Now, a lot of analysts will have ideas, but they don't have the actual, unless they have a mole inside the company, they don't know exactly what's going to happen. So earnings tend to move stocks a lot more. So what I like to do is I like to have options through earnings, but I don't like to have the actual shares. So that's kind of my take on it. All right, ASML. Now ASML is a really interesting company, as you probably well know. This is the company that's the world leader in lithography, and this is what's required to make the very, very, very newest level of chips. Now, many of these machines are purchased by TSMC or TSM. That's the symbol of it, Taiwan Semiconductor, because this is the company that makes the state-of-the-art lithography lithography machines for the semiconductor industry. So it's a leader. It's a little bit different. It's in the same category as an applied materials, but applied materials products typically go for more commodity-based chip designs, such as the ones from Micron, the memory chips, whereas ASML is the state-of-the-art processors like the ARM processor, those kind of things. So this is a state-of-the-art company and very, very interesting. Now, is it buyable? Well, no. I wish it was. I wish it was, but this has just been such an incredible stock. Now, there is a way to buy this stock. It's called buying it inch by inch. Now, I don't necessarily recommend this, but back well, not many years back, when William O'Neill invented the CAN Slim system, he basically he basically was looking at stocks like this, stocks that just keep going up. They never base. Where do you get into them? Well, actually, there were two chances to get into it. There was a chance to get into a double bottom basing pattern, but that was way back in September of last year. That was really the last time that we had an honest base. But ever since then, even it pulled down a little bit when the COVID crash, but not hardly at all. That's why this is just an incredibly strong stock. How could you buy this one? Well, you can buy this by, and it's not, I don't necessarily recommend it, but you can buy it. Now it's pulled up today. Each day it moves up. You buy a quarter position, you buy a fifth of position, fifth of position, fifth position, fifth of position. So if it's up 5 days in a row, you're going to have a full position. That's really the only way you can buy this. There's really not there. Unfortunately, the stock is doing great, but it really doesn't have a buy point on it, and so I probably would not be a buyer of ASML right now. I just probably wouldn't. Question on Volt. Of course, this is the temporary staffing company. Now, I personally hold RHI, Robert Half, but Volt is also a very good in this very strong staffing area. Now, I don't think it's as good a stock as Robert Half though is. That's my opinion of it. It's a very inexpensive stock, $4. So this is the thing also. Many stocks that are below $10, there are rules in many of these funds. They cannot buy stocks typically that are under $10. So it's a real handicap if the stock is under $10. Now, Volt is a good company, but it is under $10. So it's not going to have as strong of institutional support. Let's look at the number of funds that are in it. Just kind of want to show you this to see. We definitely, I think there definitely are some funds in here. Let me just take a look here. Yeah, owners and funds. Yeah, okay. So notice and part of the reason is because the stock is so cheap. There's 34 funds in this as of January of this year. So it does have some funds in it, but not a lot of funds. Now, let's compare it to a stock that in the same group that I think is a better stock, and that's Robert Half, RHI. And RHI is just, got a very nice pattern. That's a little bit extended, mind you. It's a little extended. And of course, you know, we're looking at a $4 stock, and this is a $100 stock. I can say, Jim, I can buy a whole bunch of Volt for, the price of one share of Robert Half. Don't think in those terms. Think of it in terms of percentages. Now, obviously, if it's, Google or Amazon or something like that, it's $3,000 a share. That's a little bit different story. But with this one, just think of the amount potentially of increases. So what am I trying to say here? Well, what I'm trying to say is that if you're looking at Volt, you might want to be looking at Robert Half. Why? Because we're gonna come through when the pandemic ends. We're gonna come through this, and there's going to be a lot of demand for contracts, and there already are. Robert Half's numbers were up 43%. Their sales were up 43% in the last quarter. Now they're coming into earnings, and they had some fantastic earnings. Look at that, 224%. So their June numbers, the first half of the year has been very, very strong for Robert Half, and I think it's going to continue to move up. So this is my recommendation. Instead of looking at Volt, take a look at this one. Now, remember, with Volt, we only had 34 funds in it. Robert Half has 1,680 funds in it, and they're in the same business. So also, Robert Half has a 100% checklist. This is the best you can get. So My take on this, Volt is a good company, but I would consider possibly looking at Robert Half if you're interested in this area. It's a good area, and but I would recommend it looking at Robert Half as opposed to Volt. It looks as though I sold my Nvidia. Oh goodness gracious, is it too expensive? Well, you could get back in here. You know, this is I tell you, this is the thing with these stocks like like Nvidia. Nvidia, I believe, is one of the most quality stocks right now. And it's tough because it just fools you all the time. You're like, oh, it's fading. I'm going to get out. And then it does something like this. But I mean, you could get in here. You could get back into Nvidia here. Now, do I recommend it? Well, it is extended. I'll be honest with you. You know, right now, Nvidia is extended on a cup with handle. You could buy it here. If you do, you probably want to buy. You know, you don't just want to buy a half position. You want to buy a full position here to get the lowest average cost that you can get. I do think we're going to see Nvidia go higher, and I believe and again, it's hard to judge where a stock is going to go in what time frame. But I think coming into October and towards the end of the year, Nvidia is going to have a very strong year, a very strong year. So I fully expect it to move to 250, 260. Not next week, but I think in the next few months. I really believe that because of this trend. Now, what happened? The reason there was this cut base. I'm going to zoom in a little bit on Nvidia and see if we can get in on that a little bit. See if it lets me do that. 1, 2, 3. Not getting it in too tight. This is a 175% magnification here. So it's easy for me, but it's hard to hard. You can see how there's this cup with handle formation. The buy point 207.33, and then it moved above that. Well, what can we do on that? Well, what was happening was when it came off of this base here at 162, what happened is it went too steeply. See how that line was too steep? So basically, it's corrected a little bit. So what I'm going to do is I'm going to put this trend line here, and I'm going to sort of correct it back to the 10-day moving average. This is kind of where I see Nvidia going. So I definitely see it moving to 1, 2, 3, 4. So I definitely see it moving to about the 250 frame towards the end of September. So I think you definitely could get back in here because I do think that, again, once it went through the base period, it's just at the same slope and angle on attack. So I think that, we haven't seen the last of Nvidia. So here's the thing about really quality stocks like Nvidia. It's best, and it's hard to do this, to not sell it unless you're coming into an earnings period. Just keep pushing your stop loss up. But I definitely think you could get back in here. Now you're not gonna, it's a little bit more dangerous, but I definitely think you could still buy it. It's extended. I'll be honest with you, it is extended. So I wouldn't necessarily, if you're going to get back in, I think you need to get it back in now as quickly as possible. But it is extended. You got to be aware of that. But I still think you can get back in. Really, my maximum extension off of the buy point is about 10%. I like to buy them under 5% just because of that. But you can go as high as 10%. So I definitely think you can get back in. That's my take on it. All right. Let's can you explain max return on risk on your AMD bull put spread yesterday? Thank you. Okay, thank you, Ronald. Well, let's see. Let me see if I can bring up those slides, uh, and get that for you, Ronald, because that's and I kind of want to show you that kind of what that is, and that's an automatic calculation that it's made. But let's go see if I can pull up that slide. So I'm pulling up the slides that this is the deck that went out yesterday, and this is on the AMD spread. So I'm going to look AMD. All right. All right. So there we go. Okay. So here is the deck. Uh, there we go. Okay. So we're going to kind of see both on top of each other. I hope you don't mind this, but yeah, on my presentation. But basically, what you're talking about obviously is this max return on risk, 86%, 86.9%. Well, what that means is that if the maximum return would be 465%. Now, if the maximum return, I'm just saying, if the maximum return was 535%, that would be the maximum risk. We would have a maximum return on risk of 100%. But because it's a little bit lower than that, it's 86.9%. Now, what's this in parentheses? 622% per annum. Well, if you were able to do this over a period of a year, which would be great, by the way, if you could do that, then you would make 622% on your risk. Now, here's the thing, because this is a bull put spread, guess what? We don't have to come out of our pocket. This is why I like bull put spreads so much. We're not coming out of our pocket $465. That's going into our pocket. Now it's restricted cash, but it's going into our pocket. So that does not so that stays in our account. So we already have kind of a deposit there in case there's an issue. So this is the reason I like bull put spread so much. But the 86.9% is based on the maximum risk. So the maximum risk of 535, that would be 100% max return on the risk. But because it's the max return is less than that, it's 464 as opposed to 535. It's 86.9% over the period of time. And the break even, of course, is 105. So I think we're doing pretty good on that. I'll just kind of look at this is the payout chart. I'm going to kind of look at that. Yeah, this is sort of how it moves. But let's kind of look at the payout chart. This is an easy way to go. So let's see what AMD. I just want to see what AMD is selling for. AMD here. Okay, it's at 111 right now. So let's go back to that, and we're going to look. And it's August 27th today. So let's look at 111 here. Oh, okay. If you were using the Black-Scholes model, and this is the Black-Scholes model, this is the Black-Scholes-Merton model, we should have a fair value evaluation of this today should be we have made $87. Now we may be lower or higher depending on how it's trading. Because it's moved up so quickly, it's going to be probably a little bit more. But if we just stay at this 110 level and we just move across, as you can see, we get over here and then boom, we've made all the money. Now, typically I like to close them when I made about 50% of the profit. So the maximum profit potential on this spread per contract spread is $465. I like to start looking to possibly close it if it's less than 50% of the time, and if we're up more than 50% and less than 50% of the time, then I'm looking to close it sometimes. So that's one thing, but that I want to put out there. But thank you very, very much for that question, Ronald. I appreciate it. That's a very, very insightful question, and so hopefully we will be making some money on that spread. That would be excellent. I think it's good. I think this AMD spread is going to succeed. I had a similar spread on like the AMD spread on Nvidia. Now I closed that today. Why? Because I took the profits. Now I could have carried it longer, but I wanted to just take those profits. I definitely think we're going to get some nice profits on the AMD. Now, I'm also looking at doing something on microchip only because I think it's in this sort of the sweet spot. It's not as good a company as AMD or Nvidia, but it's going to be splitting 2-for-1, and that's very bullish, and that can possibly run it up a little bit. Okay, but thanks so very much for that question. All right, next question from PP. It's PLAN. Let's look at PLAN. PLAN. And that is provides. Oh, okay. So it's a cloud. This is an area that's been heating up too. I just want to point this out. I'm going to bring up the chart here. I don't know if you can see this on here, but you notice it's on the NYSE Computer Software Enterprise. Now, this area has been improving markedly. So it's 30 out of 197. So what I'm going to do is I'm going to flip over. Well, I don't think I'm going to. If I could, I would show you how much improved this area is. Now, would I buy this stock? Well, I would be a little bit concerned about this one, PP, and here's why. This is the 200-day moving average. Okay, I don't like to buy them below the 200-day moving average. Now, you say to me, Jim, well, it isn't it's at the 200-day. That is true. That is true, but it's still below it in my book. Also, we have earnings in 4 days, so I just don't want to buy it this close to earnings. Now, I may miss the bus, but part of the thing, it's sort of like stepping out in the road when you've got heavy traffic. You want to minimize your risk of getting run over. So I don't like to buy them this close in to earnings because we can get some serious, you can get some serious earnings surprises. Let's kind of look back in the past. See, in the past, the last one, two, three, four. So the characteristic of this stock is when it goes through earnings, even if the earnings are good, it tends to move down. So let's see if I can move the magnification down there. There we go. So if you'll notice, every time this is how the sales are increasing in this company over 20% a quarter. That is excellent. Okay, but guess what? Even when that happens, it typically will. And I'm just trying to put the line on it. You see how that went down right after earnings last time, and then the time before it went down in earnings, and then the time before. Well, it did go on. It went down earnings as well, and then the fourth time. So this stock, for whatever reason, tends to move lower on earnings. So I just wouldn't buy this close into earnings. And also, it's got a relative strength of 39. So I don't think you can buy I don't think you can buy this one. Unfortunately, I think you got to wait until it comes through earnings. Through earnings. All right, let's do Roku. Roku. And this, what's so interesting about Roku is I think Roku is going to become the operating system for televisions, kind of like that's like maybe kind of like the Windows of television sets, because it seems like all the big screen companies are building Roku in. Now, that said, would I buy Roku at this level? No. And I'm going to show you why. Oops. I'm going to show you why I wouldn't be buying Roku at this level. So I'm going to jump the magnification up to about 200% here to see. Okay, we have a very nice cup formation. It came right up to the SPY point and it failed. Ooh, and it pulled back. And it pulled below the 200-day moving average. Unfortunately, this is not where you want to buy it. Now, I'm not saying we should never buy this one, but I want to show you some things that are showing up, at least for me on my chart. Even though we have this tremendous growth in earnings, look at this. 523%, 220%. 249%, all really looking good. But you know what? We have this little Easter egg here. What that means is that now, if that was a blue bar and an Easter egg, boy, I would like that. But unfortunately, what that says to us is that this is the highest volume since the last base. And the last base was back here. So for some reason, and I don't know why this is the case, I'm not privy to this, but right now we're still in a basing pattern. So until it reverses above the 200-day line, which is this black line here, I think we got to kind of put it on the back burner a little bit. So I would not be a buyer of Roku at this level. Just wouldn't be a buyer just because of the chart pattern. I like the company. I like what they're doing, but the chart action, I don't want to buy it below. I just don't want to buy it below. I don't want to buy below 200. I don't want to buy it below the 200-day line. So that's kind of my take on it. Don't want to do that for that. Okay. PCOR. PCOR. Okay. Let's see if I can get that in here. PCOR. If I can get it down. Yeah. PCOR. I think Peloton had a huge drop off. Now this is an IPO. I'm not familiar with this one. This one just came out. I'm on the weekly chart here. Typically don't want to buy a IPO until at least it's been around for 3 months. Now, this is the daily chart on it. We IPO'd at 67 on this one, and we moved, we pulled back, we moved up, but then we moved into the buy zone, and then we moved above the buy zone, and we've moved back into the buy zone. Would I buy this at this point? Probably not. And the reason is is because even though it's in the computer software enterprise area, the love in this area is typically going into the mega caps. So, probably not on this one, at least for right now. It just doesn't look. It doesn't look like it's set up properly to buy it. Now, that's not saying it's not watch listable, but I really want to see it move above about 120. That's the former higher high before I'm going to get back interested in it. The relative strength is looking good though; it's pulling up, but I just think just not the time for this one. Time to watch list this one, and it's going to take a little bit of a time. So, got to watch list that one a little bit. All right, let's look at UAA. And UAA, Under Armour. Now I had this one before. I had a very nice spread play on this one. This one is actually looking fairly good. Now, apparel manufacturers have fallen a little bit, but they're still in the top 60% of all of the stocks. So that's a very good thing. The question is, can we buy Under Armour at this point? Well, it's reversed above the reversal line. That's why I have this reversal line on it. Their earnings per share were absolutely blowout. They're up 300%. This was basically on August 3rd. They had great numbers, and look, it just roared out of here. But it's come up to the buy point 2602, and there's been some resistance, so it's pulled back. So right now, it seems to be right at the 21-day line. Now, if we got some if we got a strong bounce off of this line, then we might do it. Now, it's obviously made the first day of it, but here's the thing: I want to see this move up maybe another day or two, and then I'd possibly consider getting into it. But I wouldn't get in with a full position based on this chart because a cup with handle, it just takes time, and that's the thing. Here's the problem with the cup and handle: it's an awesome pattern. This is probably the best pattern there is out there. But one thing I want to warn you on with cup and handle is that handle can be awful long, and it could just continue to be kind of in this range for a while and then move up. So I probably would pass on this one. I just think that there's better merchandise out there right now. It's a good stock in a good area, but I think it's probably I would watch this one. I would not buy this one just because of that. Just because of that. All right. Is Macy's a good idea? I sold some of my Macy's this morning, and it was because what I did is I looked at one of my positions and I bought it too late, so I sold the position that I bought too late. I kept the positions that I bought correctly. As you can see, I bought basically at right before the breakout, and this is the kind of the handling action, even though this isn't a true cup of handle. But this is how stocks will typically trade. There'll be a cup, and then it'll come up, and then it will pull back, and then once it's pulled back and it hits a major line, and the line here is the 40-day moving average. Then if the volume dries up, and you can see it did. See how that volume drove up? It went it 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 dried up. See, selling into, and then all the sellers were washed out. Okay, it hit the the 40-day moving average. That's where it reversed. Say that, and that's where it reversed higher. And then as it went higher, you see it made this very nice. The sellers were selling, but they're fewer and fewer sellers. So my guess is with Macy's, this is going to go higher. This is going to go even higher. And yes, you can buy it right at this point. So I think it still is a good idea to buy this one. Now, I trimmed my position only because I wanted to sort of rearrange the deck chairs on the Titanic. But I still have Macy's. I really like the stock. I like the action. I also like the fact that it's the number two category, 2 out of 197. So that's looking pretty darn strong when it comes to a stock. So right now, Macy's is absolutely actionable at this level. You can buy it right now. And of course, it's after hours. I don't recommend buying it in after hours, but on Monday, if it holds, at this $23, $24 level, I think it's a very good buy. I think you could do a lot worse than buy this one at this level. Let's look at Palantir. I have Palantir as well. PLTR. Apparently, they had some incredibly good uh, news reports. And by the way, we're finally at a place where I think you can start building a bigger position in Palantir. I'm going to zoom in on this a little bit. Now, I have been I tell you, I've been all over the map when it comes to Palantir. I sold it out and I was like, "Oh, it'll never come back." And then I'm like, "Oh, it based and it moved above the reversal line." That's where I started. I started with on the 12th. I bought a half position basically, and I bought it basically to set my stop loss 24.92. It's in a beautiful consolidate. It's in a cup with handle, but what I like about this cup with handle is that it's right getting ready to break out. Will break out. Now here's where if you want to buy Palantir, here's what I would recommend doing. I'm going to set an alert on the line. Basically, this is where I want to buy it. I want to buy it right about 26. That's going to be the ideal place for me to buy Palantir. So I'm going to zoom out a little bit and I'm going to show you. Yeah, there we go. Okay. So what's starting to happen? This is sort of this is the handle consolidation. It's gonna pop out. So here's what you can do on this, Jay, that might be a very, very good play, and that is set a buy stop limit order at 26 plus 10 cents for 26.10. As the stock goes to the stop price of 26, then and immediately it automatically issues an order to buy up to 26.10. So as it's pushing beyond the buy point, which is about 26, it will buy you in at about 26.10. So that would be an ideal buy on Palantir. And by the way, they had some excellent earnings. They're up 300%. So I do think that Palantir finally, after all of this consolidation, see, that's what happens. The stock will go up and then it will consolidate for a long time. See, and this just consolidated for a long time. And now I think it's ready to make a move higher. That's just what it takes. That's just sometimes what it takes. It takes this amount of time, basically come all the way up here, and then once it pulls back, it's got to consolidate, and then now it's ready to go. So I really think that if you were to buy on a buy stop limit order, Palantir at 26 and then 10 cents, I think that would be an excellent buy, and I think you'd be very well rewarded for it. This is a good stock, and it's coming into its own. It was an IPO. It was, I don't like trading IPOs as much. Now it's a little bit more seasoned. It's still not a totally seasoned stock. It's only had a 200-day moving average for about a month, but it's basically getting to the point where it's starting to become very investable. So I do think that Palantir has a really good future, and based on this chart, I would want to go in at about 26.10. That's kind of where I would want to be in. All right, another question from Pablo on Nvidia, and of course everybody knows I like Nvidia a lot. I've been trading it. It's sort of my Tesla substitute this year. It's a little extended. I'll be honest with you. It's a little extended. Could you still buy it at this level? Yes, I think it's a strong enough stock where you can buy it. Now, I'm not saying you should buy it too much above this because we are extended, but you can add to. You definitely can add to it. I'd even consider if it's a half position, possibly a new position, but I don't really want to be starting a new position here. But adding to is fine, absolutely fine, and I think it's a great stock. I do, of course, think that at least for right now, it's sort of in that sweet spot. All right, I think it's going to be the last question because we're almost at an hour here, and this is coming from Jose. Let's look at Wish. Now, this is kind of a meme stock. I'm not sure that this is one you would want. Cortex Logic. It's in a downward trend. You can see I've drawn the reversal line here. It has not moved above this reversal line. I think right now, Jose, I just think you can't. If you're in it, please consider selling it. This is not doing well. The stock is not doing well, and I just don't think it's a time to get in it. I don't think it's a good. I don't think it's a good one for right now. So that was that. Basically gonna say that on that. Okay, last question from Aziz. Thank you very much. BFIN. Let's look at it. BFIN. BFIN. Take a look, and that's Bank Financial Corp. It's a holding company. And interesting, it's in DuPage County. So this is up in the Chicagoland area, very much like this area, by the way. This is a relatively low price stock, but this is not bad action. It pulled above the buy zone and it's pulled back in after hours trading. It's a savings and loan, so it's 89 on 197. These are tough stocks to trade. I'll tell you why, because they don't have a lot of volume. One third of the stocks in the S&P 500 are banks, and this definitely falls into the category. You can definitely make money in banks, no question. But there are some red flags here that I kind of want to point out, and I'm not trying to be Debbie Downer here, but we're seeing some declining sales, and I don't like to see that. Now, also declining profits. Now, it's been holding its own, and this is not a bad chart. This is not a bad chart. This looks like it's a possible acquisition target. That's kind of what it's looking like to me. It's got cash flow, it's got return on equity, so a lot of things are lining up for it. But you know what? I just don't think at a 56 checklist. I just don't think it's time for this stock. I would not buy. I would not buy this one right now. BFIN. I don't think you can buy this one right now. Thank you very much, Kate. I hope you also, everybody out there, has a good weekend too. I know I'm going to be enjoying myself at the pool, my favorite spot, out by the pool. Hopefully, I'll get some. Hopefully, I won't get some sunburn, but that's what I'm going to be doing. And everybody, we're going to be obviously. The Labor Day weekend is coming up. We're not going to be online on Labor Day because it doesn't make any sense because the markets aren't open. But we'll be coming back probably on Tuesday. So everybody, have a very very wonderful weekend. I think is it Labor Day? Is this Labor Day weekend? I think, or is it next? I think it might be next week. It's 27th, so it's 20th, 29th, 30th. I think this is. I think maybe I don't know if it's Labor Day or not, or it's next week. I don't know. But anyways, everybody have a very very pleasant and nice weekend. And by the way, if you want to get on the action trade alerts, I always bring this up just because we have some nice spread trades. We had I think I put out the AMD trade on Dallas Trading Floor, but it's super easy. All you have to do and is go to www.Dallas Trading Floor. So I have one more comment. Nice weekend. Thank you very much, Kate. So everybody, have a nice weekend. Stay safe, and pray for our troops in Afghanistan. Please do that because they're in a lot of harm's way. So I will see you on Monday or Tuesday. I think Monday. Yeah, I think it'll be Monday. But have a nice weekend.